film, movie. Remember Favi? Fivio Foreign? It's
Yeah.
Favi!
Yeah.
Let's go. Action,
Put out
movie.
bangers.
Yeah, he had bangers.
Yeah,
And
his
then,
songs were nuts.
go ahead.
I said his songs were nuts. Who was he putting out music with? Pop Smoke.
Yeah, Pop Smizoke and little TJ.
Yeah.
They were
I
dropping
saw little
bangers.
TJ's been causing problems.
What did he do?
He's a problem child. Did you see him at that boxing event?
No, what did he do? What's little TJ up to?
Bro. Well, I mean, he got shot a bunch like
Yeah,
a year or
he
two
got
ago.
cooked up. Yeah.
Yeah, and then I saw recently he was at some boxing event and he got into some altercation with some dude, and then the security came over and were like shoving him back, and little TJ was like leaning around his security and like yelling at the security guard. Then he spit in his face, in the security guard's face, and his boy like is trying to break it up because the security guard's like roughing him up, and his boy's like breaking him up, like shoving the security guard too. And TJ like leans around his boy and spits in the security guard's face. And then I saw another video of him on some streamer's live stream, and they were in their apartment, and it was an Airbnb, and the streamer kept telling little TJ's like, bro, you can't smoke in here. And TJ's like, all right, my bad. And then like 5 minutes later, he'd relight the blunt. He did it like 4 times, and the dude was like, yo, TJ, you gotta go. You gotta get out of here. He's like, you can't. Just
Little
keep doing it.
TJ thinks he's got it like that, and they're saying nah. Because
Yeah,
that's
he's like, TJ,
Snoop
you gotta
Dogg.
go.
Yeah, if that's Snoop Dogg, the streamer's letting him do it.
Yeah.
TJ thinks he's got a little bit more. Thinks he's got a lot more clout than he does.
Yeah. He dodged death, and now he's just doing whatever.
That's true. Yeah, I guess whenever you dance with the devil, you're not so afraid to just do whatever the fuck.
Yeah.
I remember that. I remember when he got shot up, and he dropped
Yeah, I
that.
thought he was gonna die.
Yeah, yeah, and
I
then
think he got shot like what, 6 times or something.
yeah, he was in the hospital, and then he dropped that song. It was, I forget what the song was called. It's a good song though.
Oh yeah, I know what you're talking about.
Yeah. All right. Well, anyways, outside little TJ, what the fuck is going on, bees? We got some juice for this stream. I'm excited.
That's why we came on 30 minutes early, was to talk about TJ.
Exactly. Yeah, these guys are jumping on at 11:30. Like, oh, these guys got the. We're talking about little TJ spitting on security guards. It's like, oh, this is the alpha. How's this gonna help me
Little
make
TJ.
money on meme coins, guys? We'll tie it into it. Don't worry.
Yeah, the TJ coin's coming.
So, anyways, the trenches have been plentiful. I'm actually watching a coin right now. I don't think they can see it. Yeah, they can't. Good. Anyways, all right. So what we were jumping on for? So last night we hopped on Zoom, and you were showing me something. So I'll let you just introduce a little bit of the background and what you were seeing with this. It's a global liquidity index. Okay, so I was aware of this, that it had existed, but I hadn't been tracking it as closely as I know other people are. And so Logan had brought it to my attention last night. We jumped on the charts. We did a lot of preparation for the stream today, and let's just say we're bulled up to the tits. Not as if we weren't already, but the tits are bulled up, very heavily bulled up. And we're going to show you why it makes sense. And again, higher time frame, we had not broken our bias of being bullish because we know that the cycle hasn't finished. But this chart gives so much more information and conviction on the higher time frame bias, because it just makes sense. None of the major indicators that always show tops on Bitcoin and in crypto have been hit, nor have topped out yet. So, but yeah, I'll let you introduce it a little bit and what you were looking at, and then I'm gonna pull up the charts and we'll get it cracking.
Okay, cool. I'm pulling up a couple of the screenshots that I had.
Nice.
I'm not gonna go over these just yet, just because I know you got some charts you want to take a look at.
Mm-hmm.
Let me get these opened up real quick though, just so I have them ready.
Okay, let me do a little Mr. Producer.
All right, cool. So I got all those opened up. All right, cool. So yeah, last night I was talking to my dad because he has a couple friends that actually watch the stream, and they follow some other people in the crypto space, and they were saying, he was telling my dad, I guess the one guy really just almost strictly follows the global liquidity index,
Mm-hmm.
and that's what he uses to kind of determine where we're headed and what's going on. So the global liquidity index, it obviously is associated with the entire world. So it gives a really good idea as to what kind of legislation is going on in the country and whether we're doing like quantitative tightening or whether we're doing quantitative easing, which, Priyama and I did some more research on that last night. And it's basically determining whether the United States and other countries around the world are either cutting back on the amount of liquidity that they're injecting into the markets or they're increasing the flows of liquidity into the markets. So the charts that we were looking at last night, this tends to flow on like a 48-month cycle where it'll trend up and then it'll trend back down. It'll trend back up, it'll trend back down. So it's been pretty much almost almost perfectly following this 48-month cycle for the past 40 or 50 years, where, and it makes sense. Like just looking at the United States, we have times where we're really bullish. They're injecting a ton of liquidity. We're expanding. They're increasing the debt ceiling, which is allowing for more liquidity to be injected into the markets. And then there's also times like during tension where they think there may be a war, they think there may be a recession. There's a lot of uncertainty in the markets. They're going to do quantitative tightening where they're limiting the debt ceiling and they're going to say, hey, we're not going to be injecting liquidity. We're actually going to be taking profits from our investments and using the money that we have right now to cover government spending instead of injecting new money. So I'm going to show the charts here in a couple minutes once we go over what you want to talk about, Pri, but I'll show the one chart I will pull up here. Let me
Is it the one where it's moving up and down and you see the price of Bitcoin aligned with it?
No, it's actually the one that just shows the global liquidity cycle. So this one right here, can you see that?
Oh, that's exactly the one I was talking about. Synergy. Perfect.
Oh, nice. Okay, cool. Yeah, so this shows the global liquidity cycle. So this is basically running on a 48-month cycle, and this is showing since 1968. So you can see there's definitely times of deviation. One of the ones that stood out to me was in the 2017 crypto cycle, when everything started exploding. We were seeing a deviation from this cycle, which makes sense. Like 2016 was whenever Trump got elected, and he really changed a lot whenever he came in. A lot of people were very bullish on him as a president. They knew he was going to be wanting to inject liquidity. He wanted to expand the U.S. economy and the global economy. So a lot of people were very bullish on him. So you see this deviation from the usual cycle in 2017, 2018. But you can see relative to the moves that we were getting on this chart in previous cycle tops, it wasn't much. We got about halfway up compared to where we normally do. And the reason that we saw exponential gains in the 2017 cycle was obviously the crypto assets were a lot smaller in size. So it took way less money to move, especially majors back at that point in time. Bitcoin, Ethereum, they were, 15th to 20th of the size that they are now, maybe even smaller. Then 2021, which was kind of a super cycle, that's whenever the Bitcoin halving year, the election year, and everything lined up perfectly with the top on the global liquidity cycle. And then throughout 2023, 2024, we've been kind of putting in a bottom on this chart. And then we're expecting to, top out somewhere around the middle to end of 2025, which is the same thing that we saw in 2021.
Right.
So I think that this explains, why Bitcoin specifically has been pretty much outperforming everything. I mean, especially majors. Obviously, there's been altcoins and shit that have outperformed it, if you caught the right ones. But in general, like Ethereum is still, well below range. Bitcoin is still trading, $30,000 to $40,000 above the previous range that it was stuck in for a couple years. And it was able to do that without global liquidity being on its side. So Bitcoin is able to go up to $105,000, $110,000 within, not the perfect conditions for it to perform as well as it should, which is why we've been preaching, the bull run really didn't happen yet. Because until the global liquidity cycle is moving in accordance with it, it's fighting in favorable conditions.
Right.
So, we're trying to invest and expecting a asset class that's pretty far down the risk curve to perform well whenever we're experiencing quantitative tightening and people, especially with the tariffs and all the news that's been coming out, people aren't really willing to move further down the risk curve. So with this in the position that it's in, yeah, I think it's going to be, 2025 into beginning of 2026 is going to be crazy because we got all the markers starting to move in accordance to what we want. And I'll show the PMI chart a little
Sure.
bit later too. But this is the main one I wanted to talk about first, and then you can take it.
So let's see here. Meaning they're nowhere near top. I assume numbers topping as well. Yeah, nowhere near top. I agree, Leaf. Of course not. Do me a favor, Bees. Put that chart back up real quick. I just want to, because I want to comment on this as well, and then I want to show you guys where we're at on Bitcoin. So keep this in mind, right? The global liquidity cycle, the global liquidity index. Why is it so important? So Logan was talking about how it's has to do with the central banks around the world, and when you look at things in a grand scale, so what's going on in the entire fucking world, and how do the biggest players in the world affect market conditions for everybody else? Because as individuals, as retail investors, as we all are, we can't personally affect the price action of the major markets of the world. That's just not what we do. We just invest in what we think is going to go up over time. And then if the conditions are favorable for us, we make a lot of money. So who are the people with the most liquidity in the world? Well, the Federal Reserve, the Fed, the Bank of Japan, the European Central Bank. All these major banks across the world are the ones who have the most liquidity. They're the ones who print the fucking money, okay? So what happens is we end up timing up these cycles, these Fed cycles, with the other central banks across the world, so that there's expansion and there's tightening at basically similar times. And so what you had seen since COVID, because they had to get so aggressive with money printing, inflation was out of control, etc., the Fed went through a quantitative QT, quantitative tightening cycle, along with other central banks across the world. So they were raising interest rates, making money more expensive to borrow, therefore taking liquidity out of the markets, therefore making less people want to spend money or get loans out to spend money. And so what that does is that slows down inflation, but that also slows down markets. That's why we get the bear market in 2022. Okay, so we got the 2022 bear market. So what you're seeing now is now they're easing the interest rates. Now they're bringing down the interest rates, and they're starting to stimulate spending and growth again, which is inherently bullish for small cap companies. Because small cap companies, small cap industries like crypto, what do they need? Well, they need to be able to borrow money to be able to grow their businesses. So if they can borrow money at a cheaper rate, they're going to borrow more money. They're going to grow their businesses faster. It's inherently bullish for risk assets. So that's good. So that's what we're seeing start to happen. But right now, the Fed, the Federal Reserve, is still doing QT. They're still in a tightening cycle where they're offloading their assets on their books at the Fed. They're offloading assets and creating a downward sell pressure in U.S. markets and in markets across the world. So we looked at the number. The number was $55 billion a month in downward sell pressure from the Fed themselves, right? The Fed. So what happens when we stop QT, which is looking like it's going to happen later this year, which is going to be fucking huge for our markets? Well, $55 billion in downward sell pressure every single month is significant. So we're fighting against that. We're fighting against poor liquidity conditions, right? So when they even just stop the tightening cycle for the Fed, that's $55 billion in sell pressure that's going to leave the markets, which inherently is a net positive for liquidity, because now there's no flush of that money out of the markets. That 55 billion stays in every single month. So it's a net positive for liquidity. So now what you're seeing this year, and the way that this liquidity cycle times up, is we're going to get further rate cuts throughout this year, and likely get an quantitative easing as opposed to tightening from the Fed and other central banks. Now, even better, if we can start to get them to inject liquidity back into the markets, which means that they're starting to now grow their assets, their portfolio at the Fed, which they said was they want to keep it, the Fed wants to keep it as a percentage of the overall GDP of America. So as the GDP goes up, they're going to start to grow their book as well with GDP. So that means now the Fed, as opposed to making $55 billion in sell pressure, now they're actually going to start adding liquidity back to the markets. So putting money into the markets, which is inherently bullish for us and everybody else. So we've been fighting against that sell pressure and those conditions these last 3-4 years. Now that this is all changing, this is when you're going to see the real fucking outperformance. This is when you're going to see the real bull run. People, we haven't even seen the real fun yet.
Yeah. Yeah. I mean, and I think too, something to mention is the global liquidity index. Whenever we were looking at it last night, the one stat that stood out to me quite a bit was they said that over the past, I believe, 10 years or 15 years, may even have been a longer time frame than that, it's had about a 94% correlation to the NASDAQ. So as much as people in the US fail to pay attention to anything else going on in the world or pay attention to whatever other countries are doing, other countries are paying attention to the United States. So right. Whenever the NASDAQ is moving in a positive direction, it's signaling to the rest of the world that economic growth is strong, that there's probably not going to be tension, there's not going to be a war, there's not going to be a recession, and those people are confident enough to continue injecting liquidity into their economies, which also creates enough confidence in investors to move further down the risk curve into stuff like crypto. So yeah, I mean, it's definitely a very strong indicator. It's, we'll look at a couple of the other charts here in a little bit, but do you want to?
Yeah, I'm going to pull up Bitcoin. So, share, boom, boom. All right.
Yeah. Jake just said, give me some alpha, please.
Jake, we got you, player. All right, so here's Bitcoin. All right, gentlemen. So we had been talking about this inside of the Discord. We had mentioned this already. I put up a chart as well. So we were expecting this liquidity to get taken on Bitcoin. So once we broke out of this range, it was clear, okay, we're coming back down to get this liquidity. Do one in the last final flush on Bitcoin. That's exactly what happened. I'll even put it on a lower time frame. Okay. So, all right, we were ranging inside of this range. We were saying here, there's no signal, no signal, no signal, no signal, no signal. Finally, we get this puke. This was the lowest close Bitcoin had in recent time. So within these last couple of weeks. Then once we got that poor close, it was actually on the daily. Yeah, this was the lowest daily close we had in this entire range. So you see nothing had closed as low as this daily candle right here at 91.5. That was a bearish daily close. So that was a bad candle. As soon as we got that bad daily close, you see what happens. Puke right outside the range, nuke all the way down. We had this liquidity marked out. We finally swept it. So we finally got this liquidity. We took it out. So on Bitcoin, here are the two things that are going to happen from here now. So we could either continue to puke and come down, which is possible, and fill this FVG, so fair value gap, which would be from where we wicked down, it would be like right here. Whoops. So you're looking at 76, 75K. Okay. Is that good? Would that be fun? Nope. But you guys can already see how on most of the altcoins that we're holding, the downside is more muted with this puke on Bitcoin and Ethereum, you can see, because most of the downside has already been realized on altcoins. So we're not puking as hard as we had. Like the altcoins, the good ones are pretty much as bottom out as they're going to be. So if this happens, it's not like your portfolio is going to blow up much further than what it already has if you've been holding it since the top. So, but this would be as far down as I see Bitcoin coming unless something's wrong. So this would be the fair value gap, FVG. So we got to come back down, fill this before inevitably doing something like this. Okay. And then curling back up. Okay. Now, let me also show you something on the RSI. So on the daily, on the RSI on Bitcoin, this is also the most oversold we've been since I have the line, yeah, way back here. So the last time we were this oversold on the RSI daily for Bitcoin was August of 2023. So it's been years since we've even been this oversold on Bitcoin. So that's why I'm not convinced necessarily that we have to do the complete FVG, fair value gap fill. We could be just good with this liquidity, kind of hang down around here for a little bit before we're sending up in March or April. I would say March, based off of what we're timing with this liquidity cycle. But we've not been this oversold since 2023, which is important to realize. That's a long time. That's fucking multiple. That's years. It's almost 2 years since it's been that oversold. So I have this drawn out on Bitcoin. So I like that. That's good for me. I like that it's been this oversold. We finally got that last capitulation. Could be a little bit lower. Yeah, maybe. But I don't see much more downside after this. So this is how oversold we were back in 23. Now, so that's the RSI. Now, here's what we want to show with this global liquidity index that we were talking about now. So if I had this indicator on Bitcoin, so let's see how correlated we are to this global liquidity cycle, okay? So that chart that Logan was just showing the cycles so that we come down, liquidity's low from this index, and then we come up, liquidity's high from the index, Bitcoin, crypto, all this other shit starts pumping. So if you take a look at this, okay, could even put it on, do it like this. Let's do it from, let's say, last cycle. So down below is the index that we're talking about. So this is the Federal Reserve, this is the European Central Bank, this is the Japanese bank, all together. What's their liquidity together? Okay, so here's this liquidity index. As this is moving up, that means more money is getting injected into the markets, into the economy from these central banks around the world. So you see here, from October 23 up to December 23, you see a 4.3% increase in liquidity over the course of 60 days, okay? So you see this come up for about 2 months, okay, almost 2 months. And then what do you see happen over here on Bitcoin over the course of almost 2 months? You see it pump up, right? This is front running, or Bitcoin is lagging what this liquidity is doing, this index is doing, right? So you see the index, this liquidity move up, then Bitcoin moves up and other markets move up. Here, you bottom here, you move up for 3 months. What happens after on Bitcoin? Right? It's lagged. I would even argue probably from here. Yeah, because this is just ranging. You get this breakout on Bitcoin. Look, it's lagged. Then we come down on this liquidity. What does Bitcoin do? Comes back down. What's this liquidity doing now? It's moving back up. So what do you think is going to happen on Bitcoin lagged? Maybe we come down here, move back up, right? So you want to explain why that relationship may be, Logan, or what's your thoughts on that?
Yeah, so I mean, I think it makes sense that it lags behind because, yeah, the global liquidity index, like I mentioned, it's putting a lot of confidence into investors because they see the United States government and then, you know, economies around the world injecting liquidity, which shows that they're trying to expand the economy. And it's also showing that they have confidence that, you know, there's not a recession or something extreme that's going to be coming down the pipe more than likely. So it's establishing confidence in investors. And I think that usually, especially lately with how volatile President Trump has shown to be, it takes a little bit of time for it to catch up. So once that liquidity starts getting injected, people want to make sure that it's going to sustain and that it's going to last and that it's not just, you know, an overnight thing where all of a sudden some black swan event happens, quantitative tightening gets put back on, and, you know, we get flipped upside down. So it makes sense that it lags a little bit, especially too, because Bitcoin and crypto in general is pretty far down the risk curve. So I would imagine that whenever global liquidity starts getting injected, they start loosening up a little bit and easing up on the tightening, that people initially are investing into stocks. And then as global liquidity continues to get injected, they start to roll down the risk curve into stuff like Bitcoin and Ethereum and these other cryptocurrencies. So the fact that it's lagging makes complete sense to me.
Mm-hmm.
Um, and yeah, I mean, we had the past 2 or 3 months since, November or, since September, October, we had it moving down on the global liquidity index. So then since really looks like it was about the time of the inauguration,
Mm-hmm.
global liquidity index reversed and has been moving up since then. So I would imagine that around the world, there was probably a lot of uncertainty with the election. They were waiting to see what happens, making sure he gets elected, probably assuming there was going to be some kind of black swan event with the election going on, which I was kind of expecting to happen too. And then once he actually got inaugurated, yeah, it almost called the bottom.
Yeah, exactly. The day of the inauguration, basically.
Yeah, and then since then, countries are probably having a lot more confidence. Um, I know that there's been some instability and uncertainty with the tariffs and a couple other things, like Trump's shown to be pretty unpredictable and pretty volatile. But yeah, I think over time that stuff, starts to, I don't know what the right way to explain it is. Like people start to, I think, kind of price it in.
Right.
Like they know that he's a volatile president, and then the moves that he makes and the decisions that he chooses to do start to lose power a little bit as far as the effect that it has on the market.
Right.
Um,
Like
I think it's kind of like,
the boy
what's
who
that?
cried, like the boy who cried wolf.
Yeah. Yeah. And I think like we kind of talked about it before with tier one listings. We were saying that maybe it gets a little bit diluted over time. Once so you start to get too many coins getting listed to tier one exchanges, it starts to lose its value and hype a little bit. And then people really aren't reacting to it and aping into it as hard as they used to.
Mm-hmm.
I feel like it's kind of the same thing with his unpredictable moves as people start to panic about him and buy into him a little bit less. And it just kind of becomes business as usual. Um, but yeah, I mean, with Bitcoin lagging, obviously we had a little bit of a pump on the election date, especially on Bitcoin. I know it went to like 110, just over 110, hit a new all-time high, and then really has just been puking since then.
Right.
But yeah, I mean, it's lagging. So
Right. Which makes sense, right? Because we see the liquidity index puke here. This is why you're getting this laggard move on Bitcoin. So we knew if we're watching, if we're paying attention to this GLI, and it's Bitcoin, we were measuring it out. Bitcoin is lagging about 2 months behind because it takes time for these things to go into effect and affect markets. So as this started puking, it's in September and October, and it's creating this downtrend. We got to be in our heads saying, okay, hold on a second. This thing's coming down in October and in November. Okay, that means in around December or November, then Bitcoin and altcoins must be topping out. And that's exactly what happened, because this is going to be leading what this market is doing. So now we bottomed out and we create this base and we start to move back to the upside. Yeah, we're getting this downside on Bitcoin and altcoins right now, but this is going to follow what this liquidity index is doing, which is if this is pumping back up, you're going to see Bitcoin start to curl out here and move back up. It's not going to continue to go down and go into this, prolonged bear market. That's not what's going to happen. You're going to see this start to reverse as this liquidity goes back up, flow back into markets. People are going to go back down the risk curve. Nasdaq's going to go into price discovery. At some point, whenever IWM goes into price discovery, that's when you get your alt season. We still haven't had alt season this cycle yet. We still haven't had Bitcoin dominance puke this cycle yet. The cycle's not topped. It's not topped. It's not patience. It's going to happen. So you're going to see this Bitcoin start to roll back up, and then people are like, oh shit, it's happening again. And then we're going to get that next move to the upside. Bitcoin has been moving up and gone into price discovery in unfavorable liquidity conditions, which Logan has a chart that we'll probably get to here in a second that shows that how Bitcoin's been able to move up as GLI has either moved sideways or moved down, which is huge. Now you get this GLI, this thing to start pumping up. What's Bitcoin and these altcoins going to do? That's when you see them to start to fly, because now they're in favorable conditions. So Let me get some of these drawings out of here. So this is on what it looks like on Bitcoin. Now let's take a look at Ethereum. Okay. So yeah, go ahead.
And I was going to say, if you want me to, I can even show that chart real quick,
Yeah.
just while we're still talking about Bitcoin.
Yep. Let's do that. Let me unshare my screen. All right, you're good.
So I know I had a couple different ones, but this one does a pretty good job of it. And I have a couple other ones that we can show a little bit later, but I think this one does a pretty good job. So this is on a, let me zoom out on it a little bit because it has the date ranges listed. So this is on a way bigger time frame. Like the chart that we were just looking at, that was showing, 2024 into 2025. So like you can see that it's clearly been in a pretty aggressive downtrend since it topped out at the end of 2021, which was when exactly when Bitcoin had topped out as well. So it called this top almost perfectly. It did call it perfectly.
Yeah.
So, on that chart we were just looking at, it showing that, Bitcoin or the global liquidity index has been recovering, which you can see that right down here.
Zoom it in real quick. A little bit. Yeah, there you go.
Yeah, so you can see it's been recovering a little bit here, which is what we were just looking at. But in the grand scheme of things, when you zoom out, in these conditions before, like back in the 2016, 2017 bull market, Bitcoin was moving in accordance with the GLI the entire time. So it had this wind in its sails from the jump. And like we showed on the global liquidity index cycle, that move in 2016, 2017 was off of the typical cycle that it tends to follow. So the move was way less dramatic on GLI than what it typically is, just because it wasn't aligning correctly. And then throughout the bear market, from like 2017, end of 2017 into the 2020, GLI is pretty much flatlined, just kind of ranging down. And then we get this huge up only spike in global liquidity for about a year and a half. So this was from around the time of the election, which again, elections cause a ton of uncertainty, not just in the US, but everyone, we're on the global stage. Everyone's paying attention to what's going on in the United States. They all pay attention to the US elections. Ton of uncertainty. People are de-risking going into the election because they don't know what's going to happen. Election gets, done, taken care of. Boom, COVID happens. They're injecting a fuckload of liquidity to try and save all these businesses and save the economy. So we're in an up only chart for a year and a half, which was perfect conditions for Bitcoin. I mean, that's when we saw altcoins do record breaking numbers because everything, they're just pumping money. People got no problem rotating all the way down the risk curve as far as they can go and just maximizing profits. And then end of 2021, pretty much called the top perfectly on Bitcoin. And then we've been down only for 3 years, which makes sense because there was a ton to recover from. Like we spent, the US and all the countries around the world spent trillions of dollars trying to recover from the COVID pandemic and what that did to the economy. So it makes sense that we were going to be in an extended period of quantitative tightening and cutting down on government spending and, cracking the debt ceiling, cracking our heads off the debt ceiling. And I know that right now they can't decide on a limit to increase the debt ceiling to, which once that gets passed and we're able to start printing money again, this shit's going to fly. But I mean, you see like Bitcoin still recovered from the lows over the bear market, which looking at this, I mean, it had gotten down to like 13, 14,000. I'm assuming this was probably in like 2022.
Yep.
And then we've been pretty much up only for about 2 years. And then obviously now Bitcoin, is at all-time highs, broke out of the previous, range cycle that it was in. And it's done all of this without global liquidity index in its sales. So, just from publicity and sentiment being positive enough and getting enough attention from, global leaders all around the world, like, I mean, the, president of El Salvador and Trump getting behind Bitcoin and just having so many people backing it and it being, so many people being bullish on it, it's been able to perform as well as it has and have the strength that it's shown without GLI moving in its favor. But this is why we're preaching that the bull run really hasn't happened yet. because until this chart bottoms out, which to me, this looks damn near bottomed out,
Hmm.
and it just had its first breakout above this line. This is from a couple weeks ago, but really its first definitive breakout above this line that it's had since it called the top in 2021.
Hmm.
So, once we get this moving in our favor, I mean, yeah, Bitcoin's going to go to 2, 3, 400,000 once people are coming down the curve. So,
Exactly. And that's huge because you see it whenever it crosses above the moving average. So we've been hanging underneath that moving average for the last 3 years, 4 years. Break above that moving average, start pumping above it. When you see it start to cross back over, that's when we know, okay, now it's time to start looking for the door, time to start taking profits, time to start getting out of the market because the liquidity cycle is starting to reset. But now, once we break out of that moving average, that's when shit heats up. So again, this is the same point we were making with Ethereum beta and the boys club memes that we're holding, which just so from a bigger picture perspective from the boys club memes, guys, at this point in the cycle, everybody knows Pepe is levered Ethereum. Everybody knows Brett is levered Ethereum. The people that are a part of the boys club narrative, they know Andy and Wolf are levered Ethereum. It's proven, data backed. Everybody knows it now. And it's levered Ethereum without the risk of liquidation, getting smoked from the to the downside and getting your position liquidated. So people know that. As soon as this starts to turn back around, Bitcoin starts ripping again, Ethereum starts moving again, there's going to be more and more money going into Pepe, which in turn is going to move up Brett, which in turn is going to move up Andy and Wolf. There's going to be more money than ever before moving into these assets because it's now known by the broader market to be levered Ethereum. There are no other meme coins that are like that. On Solana, nothing's correlated to Solana. It doesn't exist. So you're just literally guessing, hoping that you have alpha, hoping that you have edge in Solana. You know what to pick, and you can make money on Solana. I've been cooking in the trenches. The guys have seen it inside the Discord. I send trench plays, cooked up 2, 3, 4x's all week this week, all week last week. So there's ways to make money on Solana, but they're not long-term holds. I'm just in there trading, boom, 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 make my money, exit. On ETH, the fact that they're levered, you can actually size into these assets with high conviction, with large, I'm talking 7-figure positions. You can size in comfortably and know that how they're going to perform against Ethereum. So the point is that the reason we haven't seen the boys club have done well in the current environment that they're in, but it's not a favorable environment. Ethereum, ETH BTC has not pumped yet. Bitcoin has not topped out yet, and Bitcoin dominance gone down. It's the same thing with this. Bitcoin has been performing well in unfavorable conditions. Just wait till the conditions become favorable. How are these things going to perform? You haven't seen it yet. And so it's funny because you see people on X, you see people in different communities. The sentiment's so bad right now. There's no alt season. It's not going to happen this time. The TradFi got control of Bitcoin. It's not going to. These people they don't understand the bigger picture. They're trying to call for things that have never happened before. And I say, so what you're telling me is this time's different? Yeah, this time's different. This time's different. Okay. So you have zero data to support what your claims are, and you're telling me this time's different, you're so confident about it, and you're telling me I'm wrong? No. I'm actually looking at data. This time it hasn't been different. This time won't be different. I would rather bet on the data as opposed to saying, oh, for the first time ever, it's going to be different and I'm right. Well, where's your data? You're just guessing. You're just throwing a fucking dart. You're throwing darts in the dark. So,
yeah. I mean, I think something else that's important to remember too with the boys club, because I just think right now it's so important to not buy into the FUD, because it's like this shit happens every time there's huge pullbacks. There's so much FUD on crypto in general. Like people are saying the asset class is dead, Bitcoin's going to go to zero, like it's over, the sentiment's so bad. Like it happens every single time that there's significant pullbacks. And it's so easy to buy into it because it's like reconfirming how you're feeling, because you're obviously fucked up that your portfolio is down 80-85% from the highs. So it's so easy to buy into it because it's reconfirming the way that you feel. And you're like, yeah, they're right. You know, it is over. Crypto's dead. Bitcoin's going to go to zero. It's worthless. Da, 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 da. There's this FUD every single time. So it's so important not to buy into the FUD. And I think the other thing to remember with the boys club specifically is every one of them has a different reason for believing in it. Like I think for Pepe, the fact that it's listed to every single tier one exchange and they have tons of money to be made and it's already had tons of exposure speaks for itself that whenever Ethereum performs well, that asset is going to be one of the first things that pops in people's heads. And for people that want to rotate down the risk curve as we move into more favorable environments, that's one that they can move into with size
Mm-hmm.
comfortably and be able to outperform Ethereum significantly without having to take the risk of getting liquidated in their position. So that's Pepe. And then Brett, obviously Coinbase has a lot on the line with that coin. It's bringing, hundreds of thousands, if not millions of people to the base network. It's doing a fantastic job for them. They've listed it as the mascot for their coin or for their network or for their chain, excuse me. And it's like, they're not going to risk embarrassing themselves and let their mascot that they've chosen just get absolutely destroyed. So again, that's another coin. Whenever these, Ethereum starts performing well, it's backed by a great team that you want to be able to believe in. And then as far as Andy and Wolf, I mean, they're backed by the Discord. They're backed by teams that we're familiar with, people that we can trust, and people that we know have a lot to lose if these coins ended up performing very terrible. And they're kind of in a position where they're not really able to sell. Like they're
Mm-hmm.
really kind of holding the floor in Andy and Wolf specifically. So that's why, again, like you mentioned, I think the altcoins, especially the boys club, are pretty much bottomed out. Those two, especially because there's people that we know that have huge positions that are not in a spot where they're able to liquidate and actually sell.
Correct.
So whenever you have great teams and great people backing the two most volatile, you have tier one exchanges that have a ton of money on the line and a lot to lose by Pepe underperforming, which I don't think would happen. And it's going to be the first place people go to rotate big positions down the risk curve from Ethereum. And then you have Coinbase backing Brett and its performance throughout the rest of the cycle. I don't really know how you can lose.
Yeah, exactly. You don't. As long as you hold long term, the boys club is going to be the winning narrative. Pepe has already secured itself as the number one meme coin this cycle. It's been secured. It's solidified. It's been it's been around the longest. So it has the best distribution of tokens. It has the best price history. And Pepe is one of the only assets. If you look at all these altcoin charts, if you look at WIF, if you look at Bonk, you look at all these other altcoin meme coins that got fucking annihilated. Pepe held the floor the absolute best out of any of them. I encourage you, go look at all those major meme coin charts. Pepe held the highest floor. So that shows you there's the largest bid on Pepe right now out of these major meme coins. Pepe is the winner. And if you look at these, I showed a chart in the Discord. I kept it. I'm just going to keep it in the Discord. I'm not going to show it on the stream, but it's a chart showing when whales are accumulating Pepe and when retail is accumulating Pepe. When is that transfer of wealth happening? And you see every single time that whales are starting to accumulate Pepe again, that's when you're calling the bottom on Pepe. Right now, what do you see happening at this floor on Pepe that it held so well? And very important floor that it held. It's getting accumulated by whales right now, and retail are fucking jeeting all their bags because they're shitting themselves. They're down, their $50 portfolio is down to $10. Boo-hoo. Retail's fucking all selling. Yeah, that's the best, bro. The best is when I get texts from people. Bro, I'm down 50%. I said, how much you down? Oh, I'm down $50. Dude, don't text me about a fucking $100 portfolio, bro.
You don't even have enough, but you don't even have enough of a position to cover the gas fee.
Well, that's what I'm saying, bro. That happened. That actually happened with a guy that was somebody I knew from from college. He told me, he goes, dude, I'm buying Andy and Wolf, but I'm getting like half of my what I'm buying for. What's going on? I said, well, how much are you buying? It was literally $50, and the ETH gas fees were like $20 at the time. He's like, where's all my money going?
All my money.
I'm just shaking my head thinking, bro, get the fuck out of here.
Yeah, don't invest in crypto.
Don't invest in crypto if 50% of your position's going to gas fees. You're not ready to invest.
Yeah, that's literally not even a tank of gas. Like If you're what you're trying to buy a position of can't fill your gas tank, it's not worth spending on gas fees.
Exactly. I have another joke with with Martin. People are worried about $30 in their portfolio. I said I've lost 812 super fasts in a day. I've lost Ferraris in a day. And you're
Yeah.
worried about $30, guy? Shut the fuck up.
I remember calling you the one, yeah, on I think it was actually I don't know if it was the most recent puke or if it was the August 5th puke, but I think I asked you how much you're down. You're like, oh, I'm down about an 812 today.
Yeah. I lost a Ferrari today, so it's all right.
Yeah.
It's all right.
Oh, Jay works in the chat.
I saw that.
Oh,
Yeah, Jay Works is cooking with the gentleman. We also got Nostalgia. We got a couple of new people. We need Landwolf and Andy on tier 1 listings. Not
yeah.
necessarily. I mean, it would be nice, but we don't need them. It would
Yeah,
be good.
because I mean, especially from the levels where we're at right now. But I mean, as far as tier one listings go, I mean, we saw once Trump won the election how much easier it was becoming to get tier one listings. I mean, DGen got listed to Coinbase at like 100 million market cap. And then there was some other ones. I can't remember what was getting listed, but there was some shit projects that were getting listed at like 3 to 500 million market cap, which whenever Andy and Wolf were topping out this past pump back in like November, December, I mean, Andy was at like 350 to 380 million market cap. Wolf was almost at 300 million. So it's like they were flirting with that line to definitely be eligible for tier one listings. And when they have the teams that are behind them that are very tied in, that are solid, they have a great community that, these coins have big followings on X and all social media platforms. Like they're going to be able to have leverage to get those listings whenever the time is right. Um, and then, yeah, we get retail liquidity and see ya.
Exactly. See ya. Bye. So I was telling one of the gentlemen who just joined the Taylor's Code. He joined the Discord last week. I called him on the phone. I was helping him get set up on a few different things, and I explained to him how, I always ask people when they first join the network. I ask them, so what's your experience with crypto? How far have you gone down the either risk curve or what do you know about it? Oh, well, I've bought crypto off of Robinhood before, and I explained to him the whole thing about 99% of people that invest into crypto have only done it through major exchanges, not understanding that there's a whole world outside of these exchanges where all of these assets have been available to be purchased since they were incepted, since their inception. And if you're able to front run those exchange listings and you're able to accumulate those assets before they ever get to the 99% of retail investors, you're going to win almost every single time. Because, well, number one, for them to be able to get listed, they have to have grown to a certain size. And two, once they get listed, you'll get that one exit pump. You want to definitely cheat on that pump whenever retail starts to buy. But the reason I was saying you don't necessarily need the exchange listings in some of these smaller caps is because unless you cheat on the exit pump when it gets listed on the exchange, it's gonna be down. It'll be down only for a little bit unless we're in favorable conditions. If you look at anything that got listed, any meme coins that got listed on Binance Perps and Binance spot listings, they all got listed and then they've pretty much been down only since then. Because what happens is when they get these exchange listings and you can trade perpetuals on them, typically whales will open up very large short positions at the tops on those listings, and then they'll short that asset on the way down as a hedge to their spot positions. So as the asset draws back down, they print on their shorts, they take profit on their shorts, and then they rotate that profit back into the spot positions. So it's not actually inherently bullish anymore the way that it was. On the actual listing itself, bullish, but you got to exit there. Otherwise, they're going to draw down from there.
Yeah. I mean, I think something important to remember for Pepe especially is because I know before, whenever like last cycle, I really didn't know what the hell was going on. I played around a little bit, but I remember especially with Dogecoin, like once it started recovering and really started ripping, I had previously invested in it. I lost a little bit of money. Same thing with tons of people that had bought into it. And then, this cycle, once Dogecoin started pumping again, there's millions of people who haven't thought about Dogecoin in 3 years. All of a sudden, they're getting push notifications from Robinhood saying Dogecoin up 8% today, Dogecoin up 13% today, Dogecoin up 22% this week. It's like they're getting these push notifications, and all of a sudden, they're like, oh shit, I forgot about that. And then they come running back. And it's like at that point, we're already positioned now at the bottoms whenever it's dead. No one cares about it. Everyone's flooding crypto. all of a sudden, these like Pepe was topping out, I think around 13 to $14 billion market cap. Right now it's about 3.5 or 4 billion. So these people are going to start aping in. All the people that exited are going to be coming back because the whales are accumulating right now. Like they're loading up their positions now because they know what the inevitable future holds. The retail markets that are going to be aping back in, that's billions of dollars of liquidity that's going to be, or millions of dollars of liquidity that's going to be coming back into Pepe once these people start getting the notifications. That's why it's so important to get in now, because they're not getting notified yet. They're not losing their tits, getting all excited just yet, because they're going to be getting the notifications on Ethereum too.
Yep.
And then everyone gets excited again. And
FOMO
then,
is real. FOMO is the most powerful emotion in financial markets.
yeah. And I mean, and those, that effect too, it's like retail just buys and holds forever a lot of the time. Because one, they buy it and then they don't remember to check it. Two, they're investing an amount of money that's not really significant enough to them to where they really care. It just gets put in and then it just sits there, and they don't keep up with it. They don't have any price targets in mind. They just stick it in because they're fun and they're spending money online and having a good time. And then they just leave it in there. So it's like similar to what you see with the cascading effect whenever liquidations are happening on long positions, like we saw with Ethereum a couple weeks ago. I think that cascade effect can happen to the upside too whenever retail starts aping in, because then the pricing notifications just stack on top of each other and people are just flying in. And
Exactly.
yeah, the FOMO just gets more and more severe the more, and then people just want to ape the top. And yeah.
Yeah, 100%. Yeah, the FOMO is more powerful than the depression that you get on the way down. It's true. FOMO is more powerful than the capitulation and the sell pressure to the downside, the depression that people get whenever the price is low. Because once the price gets low enough, the mentality, the psychology is, oh well, I'll just buy here, I'll just buy more, I'll just reaccumulate my position. The FOMO, that shit is dangerous because then it becomes a game of, well, if I put in 10,000 here at 3 billion on Pepe, if we get back to 10 billion, I'm going to be up 3x. Okay, so all right, let me put in 10. Then it goes up to 10 billion. Then the next mentality is, okay, well, if we're at 10 billion, we could probably get to 20 and I'll do another 2x. Okay, let me put in another 15,000 here. Oh, okay, we're at 20 billion. All right, well, it would only be, well, we could probably get to like 50 if Doge went to 90. Okay, so that's another 2.5x. Okay, all right, let me put in another 50 grand here. That's what happens every single time, especially for those that capitulated. I'm telling you, you're in these markets long enough, you learn these emotions. If you capitulated at the lows, like a goofy, whenever that event happened back in February 2nd, I believe it was February 2nd, whenever we nuked on ETH. If you're somebody who capitulated at the lows, that FOMO is way stronger, because then as soon as you see that market, that price pumping up again, all those people who capitulated all flood back in because now they're missing the pump back up. It
Yeah.
just gets more and more aggressive.
Yeah, and I think that's the misconception that some people have, is they think, oh, those people, all these people got burnt on these assets, they're not going to be wanting to come back into the markets. It's like, no, it's the complete opposite.
Don't get back in.
Yeah, they got torched. They don't, now it's pumping up hundreds of percents. It's like, think about it for yourself. If you sold an asset for a 50%, 60% loss, and now you see it ripping face, you're like, oh my, I'm not going to miss out on it again. I'm not going to get burned again. You're going to ape in. Um, but
Every time.
I'm going to I'm going to share this one tweet, and then you can take the screen back.
Sure.
But this was the one that I think I had showed you yesterday. So this was talking about the PMI.
Mm-hmm.
I'm just going to read this out loud, a little bit of this, but this is, I thought was really interesting. So he's saying there's currently, and this was from, what date was this tweet?
Scroll down to the bottom of the tweet.
February 4th. So this was right after the
nuke.
nuke, I believe.
Mm-hmm.
So this was a few weeks ago. So this was at the beginning of February. So he said there's currently a lot of uncertainty and fear about tariffs, but underlying this is a very strong fundamental outlook for risk assets. The business cycle is improving, and here's what that means. So the PMI is looking good. The U.S. manufacturing business cycle is finally showing concrete signs of turning up. Yesterday, we learned that the ISM manufacturing PMI rose above 50, which 50, I guess, with the PMI is a critical level. We want to see it above that, and to its highest level in more than 2 years. So like we saw, the GLI has been moving down only pretty much for about 2 to 3 years as well. So it can be argued that this uptick in manufacturing could potentially be a result of companies pushing orders forward to avoid any potential tariffs, which would also make sense. Um, the industry some of my family works in, they are dependent on the price of steel and other raw materials. And with the tariff news, people are rushing to get shit done.
Makes sense.
Um,
Which
but
side note real quick, this is also why you're seeing a flood of gold back into the United States from the UK and from other nations because of these tariffs. People are so afraid of the tariffs, and I'll let you get back to this and I'll explain this after why that makes sense, but because people are scared of the tariffs and think it's good. It's good for business. It's good for the U.S. What's good for the U.S. and good for business in the U.S. means what? The stock market, the U.S. stock market goes up. So where's all that other money across the world are going to want to continue to invest in? Into our U.S. stock market. Okay, that's what I want to say.
Yep. Cool. Yeah, it says, however, from my point of view, I think most business cycle indicators are signaling that we are in the early to mid stages of an expansion. Forward-looking indicators, for the most part, signaling that PMI should continue to generally push higher over the coming months. So what does this mean for risk asset markets? So the S&P 500 12-month percentage change has a very tight correlation to PMI. U.S. stocks generally do well when PMI is above 50, which makes sense. So this was that chart. There's been a lot of correlation lately, though. This was at the beginning of February. The S&P 500 was rolling over, and then we were seeing the PMI expansion happening and moving up. So we'll see what happens there. This was from a couple weeks ago. This was the chart I really liked, though. Mm-hmm. So he said, you'll generally find that as business cycle picks up steam and tilts higher above 50 into expansion, riskier risk assets, and this is what I was mentioning at the beginning, will tend to also outperform, because strong economic growth, strong corporate earnings, and low probability of recession allows investors to move out along the risk curve, which this is why I was thinking that Bitcoin and crypto in general has lagged about 2 months behind the GLI, is because as the GLI is moving up, people are going to start investing in stocks. And then as we continue to see movement in the right direction, then people have the confidence to move further down the risk curve. So this chart is the 12-month percentage change relative to PMI in Bitcoin. So you can see, like, obviously Bitcoin has dramatically outperformed PMI, which is obviously, but you can see whenever PMI is moving, like, and it's above this 50 level, like, these levels here was dramatic. I mean, 2021, whenever GLI was backing this, and everything was pumping. I mean, we went up to a fucking 1,000 and this was obviously following COVID, the huge plunge in crypto. So they had to get the economy going again. So PMI was ripping face and put in a new all-time high. And we saw at that same time, PMI actually outperformed Bitcoin because, I mean, the economy was getting pumped to the gills with bread. All those people, all the businesses were getting those crazy checks to expand their business and pull them out of the hole.
Yeah.
The whatever it was called, I can't even remember.
I think it was like PPP loans.
Yeah, the PPP loans.
Yeah.
Yeah, so they were getting injected with cash, and yeah, so this chart ripped face. But you can see every time that this is above 50, it's putting us into a position where people are confident in the economy. They're confident there's not going to be recessions or wars or anything in the foreseeable future. That's when people rotate down the risk curve and start flooding into Bitcoin and crypto. So you can see Bitcoin moving into 2025 has been trending down since the inauguration. Mm-hmm. And PMI, for the first time, I mean, it barely tapped above 50 back in 2024 for a brief moment. But GLI and the PMI have been pretty much down only for about 3 to 4 years. But we just finally had the most, the first definitive breakout above 50 in, since end of 2022. But I mean, we've been down only. This is really the first definitive breakout in 3.5 years, which is the same thing that we're seeing on the GLI. And Bitcoin clearly hasn't caught up to this yet, which you can see in previous years. Usually this kind of front runs Bitcoin a little bit, which makes sense because GLI is doing the same, it's doing the same thing relative to GLI too.
Right.
So I thought this was really interesting. He says this chart is almost comically clear, which I agree. Bitcoin historically performs very well when the PMI is above 50 and generally performs better and better the higher PMI rises. Bitcoin cycle tops are often found very close to peaks in PMI, which this chart has not even done anything remotely close to a peak. He says, but the S&P 500 is so far ahead of the business cycle. Is this time different? You'll notice that the S&P 500 to have gotten ahead of itself currently in relation to the business cycle. So has this happened before? Yes, a few times. But there are two previous examples in particular that look similar to the current setup. The most recent occasion was in the mid 90s. So he's saying that sometimes the S&P 500 does get quite a bit out ahead of the PMI.
Mm-hmm.
That happened before back in the 90s. He's saying was the most recent time that this would be relevant. And yeah, you can see it was same thing was happening here, but then they both caught up.
I was just gonna say, but it's still bullish because as soon as the PMI crossed the 50, the S&P still made new all-time highs. Retire.
Yep. So yeah, PMI above 50 is huge. You can see we're just now breaking above it, and it looks like these two charts are gonna end up interacting and then moving up
Together.
Yeah.
This is huge. This is you want to talk about fucking alpha? I know Jake said give me the alpha today. This is fucking alpha. So we're moving. Oof. Oof. Heroes will bid. That's what we've been saying. Heroes will bid.
Yep.
I like
so I really like that tweet as well.
Yeah, that was good. So I'm going to show real quick on Ethereum then, because now we got to know where ETH is at for our Precious Boys Club. So boom, 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 bing, bow. All right. So we moved to ETH. So I had the GLI underneath of Ethereum as well. Now Ethereum, of course, is correlated to Bitcoin. So if Ethereum's correlated to Bitcoin, of course, it's going to be correlated to the GLI just the same way that Bitcoin is. But just to show you this lagging effect that you see on crypto. So I have ETH on the daily just so you can get an idea. Put this bottom in on the GLI. Right? It front runs, okay? So ETH nukes as this GLI is pumping higher, right? Ethereum lags, and then you see later ETH do this. Okay? Now you see the GLI as a whole, this market go down. We'll call this, right? This nukes, then Ethereum does what? Well, it does the same thing then. It's lagging, but it's going to do the same thing. You do something like this, okay? Well, we're moving back up now, ladies and gentlemen. So we just need this to continue to move higher. And then what do you think is going to happen to Ethereum? Well, higher, okay? So let me show you the timing now on something like this. So we were talking about how long it usually takes between the two. What's the delay on it? So for here, it was, if we want to do it from here when we start breaking out, 93 days, so about 3 months, okay? So this was here, so this topped out, this was the bottom. So if we take the top of this move on ETH, or on the GLI, it's about 74 days, so almost about 2.5 months, okay? So the indicator works is GLI. It's, if you look it up, it's Global Liquidity Index. So M2 Global Liquidity Index right here. Okay. So it's lagged by, let's call it 2.5 months, 3 months is what it's going to take to be able to start seeing that move happen. Okay. Now we see this move happen on the GLI. We come back down. We set this bottom. Let's call it here. Or should we? We'll do it from here. Okay. So you get this downward move, and then the downward move on ETH happens here. So yeah, about 50 days. 50 days. Okay. So this started on September 30th to November.
Obviously, it's a line chart on the bottom, but you literally see it recover for about 2 weeks and then refill the wick.
Yep. Isn't that crazy? So TA works, huh? So then you get this move down over here. It starts in December, which makes sense, right? and then we get the bottom of the move in February. So about almost 2 months, let's call it. All right. Well, now if we're moving up on here, we're going to say likely on this first move up, when we start moving up, 2 months from then is whenever we should see Ethereum start to move back up. So this is where we're at now. Well, let's just call it 2 months because that move's not done being made. But let's call it 2 months. Well, what would be 2 months from January? Okay, this January move. Well, 2 months from that January move would actually take us into March 10th. Okay.
Prime time, baby.
Prime time. What's that? Fucking ETH season. So if it takes us 2 months into March, well, isn't that interesting? So we nuke all the way down. So we should start seeing upside 2 months lagged. So if it's 2 months lagged from January, 2 months lagged from January 10th would be March 10th, would be whenever you start seeing the upside on ETH. Okay, so keep that in mind. March 10th is when you should see upside on ETH, right? So let me put that on the chart. Stay with me here, ladies and gentlemen. I know this is high-level analysis, okay? So if the GLI is front-running ETH, ETH is lagging behind, okay? We know it's about a 2 month difference between the moves on ETH and the GLI, okay? Well, so in theory, we should see Ethereum start moving back up in March. Okay, well, let me show you another piece of confluence. So this was another chart I had put inside of the Discord for the private members. And so I said, okay, well, let's look at Ethereum in and of itself. This last liquidation wick that we had, liquidation event in August, took us 19 days from the Pico low before we set the Pico high. Okay, so 19 days. Well, what's this Pico low? Pico low to the Pico high, 20 days. Holy shit. Same exact time frame. Okay, interesting. Well, then from the Pico high to the next low, from whenever we filled the wick, took 13 days. Okay. Well, if we take this wick, bomba clock. Oh, getting a phone call. Interesting. So, and then we get the so from the high. Okay. So now from the high to the next low, let's say it's 13 days. What's 13 days? 13 days would be like right here to the next low. So let's call it right here. Well, if we did 19, we did 20, so it would be 14 if we add 1 day just like last time. Isn't that interesting? So the next low, if we play out the same way we did in August 5th, if the same low gets set around 13, 14 days from that high, that local high, that takes us out to March 9th. Well, when's ETH supposed to start pumping according to the GLI? March 10th. Confluence. What's it called? Coincidence? Maybe. Confluence? Probably. So it all lines up. It makes sense. So now I'm thinking in my head, well, then that means in March, we should have a bullish March for crypto and specifically Ethereum. Well, what does that mean? Well, you better start fucking accumulating something over the next couple of weeks, because by March 9th, March 10th, according to these charts, if we're going to line up relatively similar based on the date ranges, then we should be moving up. That's huge. So talk about a catch there. Looking at the GLI, now we mark this out on the nukes, the two past liquidation events on ETH. That's looking fucking bullish to me. So I'm curious, what do you think there, Bees?
There's some alpha, Jake.
Yeah, there's your fucking alpha, Jake.
Yeah, I mean, I thought this chart was great. I pointed this out in the Discord too, that I really liked what you did on the top one.
Mm-hmm.
I mean, now being able to back it up a little bit more with the GLI too is fantastic. So yeah, I mean, we had obviously a lot of uncertainty the past couple of weeks trying to figure out what Ethereum was going to do, if it was just going to up only recover from the wick down, or if it was going to kind of fake it out, eventually roll over, refill the wick before sending higher. And I think whenever the liquidation happened at the beginning of February, we pretty much said, yeah, we're going to try again in March. So, we knew that this was going to happen. And I think with the timing and the way everything's lining up, and with kind of what Trump and the FOMC are indicating. I mean, I think that there's no reason, especially with how the GLI chart's looking, there's no reason that liquidity shouldn't continue to get injected. And yeah, once we rotate from, QT into QE, we're going to be
Ripping face.
up only.
All right, gentlemen. Well, that's the fucking alpha. Do they deserve any more? Do you think they should get more alpha than that, or well, let's see what the likes are at. How about we check the likes on the stream and see if they deserve more alpha. Did you guys panic like? Did you guys like the stream? You guys want your? Oh yeah,
I'm showing 10, I think.
Yeah, 10 likes on the stream. It's not bad. Not bad. How many live viewers do we have? We're 13 live viewers at the moment. All right, it's not bad. It's a majority.
I know.
Of you.
At one point, I was showing we had 14 just on YouTube.
Yeah. The people were getting the juice. So
brains were exploding.
Gentlemen, if you don't want your sons to be catching James Charles videos in the algorithm, I suggest you like, comment, and subscribe to this stream so that they can get the real fucking juice, learn how to be fucking financially free, learn how to be gentlemen, learn how to be fit, good mindset, strong in their faith. I would suggest that you guys put this stuff out into the algorithm for them, okay? I'm thinking, do we look at Pepe and the boys club? We've got time. Gentlemen, do you guys want to see the boys club? Put it in the chat. What do you want to see? I'll throw up a new chart. I'll throw up one more chart. What do we want to look at? So we're saying possible launch day for the boys club March 10th, correct? I'm looking at a bottom to be set on majors and Ethereum in the first week of March, and then climbing higher March, April, May would be that's going to be my bias right now. Now, in the meantime, more downside, yes. So very, very, very short time frame, I'm still bearish. I still think there's more room to come down on Bitcoin if we get it. There's still more room to come down on Ethereum if we get it. Because like I said, if we time it out similar to ETH from this last event, we still have until March 9th to set the actual wick low and the wick fill. So I still see ETH coming down further. So, I mean, we could still come down into here, like 2100 before moving back up. So locally, very short time frame. Yeah, I'm still bearish. But I'm looking at March as we're definitely moving up higher. Absolutely. Okay, so more. He said more. All right, we'll throw up boys club. Oops. So let me get these out of here. I'll just remove all drawings. Okay. So I'll actually show.
I can show the if you want to while you're pulling something together. I can show the ultimate moon boy chart, the 900K, the 900K Bitcoin moon chart.
Throw it up. Yeah, this is fucking classic.
900K Bitcoin.
Cycle top boys, 900 bands.
900 bandissimos. Yes, I mean, this is showing similar to the other chart that I had shown, but yeah, I mean, I just think this is, yeah, you can't argue with it. It's like, it calls it every single time. Right. So I didn't really have much to say about this chart because it's similar to the other one that we had looked at prior, but yeah, I mean, it's just the correlation it's uncanny. It's damning.
The evidence is damning. If you were in court right now and we were using this as evidence to convict you, you're going to fucking jail, Harry.
We've proven beyond a reasonable doubt that this is not the Bitcoin top.
Right.
Can you rank the boys club 1 to 4 bullish to bearish?
Do you want go for it?
I mean, it depends on what you mean. Like, I wouldn't say, because they're all going to move in accordance to Ethereum. So if you're bullish on any of them, then you're bullish on all of them, or you're bearish on all of them. I think the better way to rank them would probably be the X's that you can expect to get. Yeah, the X's you can expect to get out of each one. If we get just back to previous, I actually just wrote it down the other day. If we get back to previous highs that we saw in November, December, Pepe from the level it's at right now would be about a 3.5 to 4x. Brett would be about a 6x, 5.5 to 6x if it gets back to all-time highs. And then Andy and Landwolf are both about a 7x if we get back to previous highs, 7 to 8x, depending on what you want to call the top from before. If you want to go off the wick or whatever, but so that's kind of the way we're looking at it. Obviously, Pepe, you're going to have a little bit more stability. It's pulled back less from the highs because it's a way bigger asset. It's held the floor, like Priamo said, a lot better than pretty much any altcoin on the market. So Pepe, you're going to have a little bit more stability. You can also clip in with more size without affecting the chart because it has a lot more liquidity in it than the others do. But if we get back to ETH around 4,000 or 4,100, I would expect about a 4x out of Pepe, about a 6x out of Brett, and then a 7 to 8x out of Andy and Landwolf at current levels. If we get Ethereum to like 6,000, we're going to see obviously a lot more dramatic moves on these coins too. I'd say probably a 6x to 7x on Pepe, probably about a 10x on Brett, and then probably about a 15x minimum on Andy and Landwolf. So yeah, I'd say that's probably the best way to rank them. Personally, I'm prioritizing as I'm building my positions more this week and next week. I'm prioritizing Andy and Landwolf a little bit more just because I know I'm going to get the most X's. And also my Pepe and Brett positions are substantially bigger than Andy and Landwolf, so it just makes sense. But yeah,
I agree 1,000%. I would have answered it the same exact way. Yeah, it's not bullish or bearish, any of them. They're all correlated to Ethereum, so there's no difference. They're all the same exact thing. They're just on different leverage amounts, so they're just different levers. So Andy and Wolf are going to get you the most multiples from this point. Pepe is going to be the least volatile if you have a very, very large position. So that would just be the answer. So if you have anything less than 100 grand to size in, definitely Andy and Wolf. You want to split evenly between those two. If you have a mil plus, I wouldn't necessarily size in a mil plus in the Andy and Wolf only. I would diversify that between all four. So I would say, for the sake of giving you percentages, I would say put a 250,000 into Pepe, 250,000 into Brett, 250,000 Andy and Wolf, just so you can get a nice diversification of that type of capital between 4 different projects, so that you're not getting smoked on slippage, and you can actually size out effectively. Because the problem with having $1 million and wanting to buy only Andy and Wolf is you might have issues sizing in. You'll have issues sizing in at these market caps for sure.
I was gonna say, yeah, you sizing a $500,000 in the fucking 40 mil market cap.
Yeah,
you're blowing the fucking lid off that thing.
Right? Yeah. I was thinking in terms of when they were a couple $100 million, and then they're at fucking 40 and
well, you get that
50.
kind of size at these levels, you're the giga whale. You control the chart.
Right. So yeah, you don't want to size in with that into Andy and Wolf. But if you have anything, like I said, anything less than 6 figures, you're definitely sizing to Andy and Wolf, because those are going to get you the most multiples. You can size into effectively with that amount of money, and you're going to get the most multiples. That's the whole point. So the only reason that people would opt into Pepe and Brett over Andy and Wolf at this point is strictly due to liquidity reasons, so that you just simply have too much money that you can't effectively size into Andy and Wolf, where it's not going to make sense for you. You're going to pump everybody else's bags while you're trying to get your position. So yeah, absolutely. And we'll give you the actual, so for the gentlemen inside of the Discord, that's where we give them the actual charts with the fibs, with the actual market cap targets and where we're taking profit and where we're selling. If you want to have access to that and you actually want to be able to make money with us, join the Taylor's Code. So the link is in the description of the video. The network is off the charts. The gentlemen that we have inside, I love them. These guys are the best. This is why we wanted to create this network, because we want to deal with people that have the similar mindset, similar goals, aspirations as us. Because when we're all working on the same team and we're all working towards the same goals, we all get there faster and we're all more competitive. Men, you don't want to move alone. There's no such thing as the lone wolf winner, lone wolf. No, it doesn't happen. You don't do shit by yourself. The way you win, the way you make money, the way you're more competitive is when you have a team around you, people all working, watching the markets together, improving our incomes, improving our fitness levels, improving our faith. These are the people who win. That's what the organization is. So if you want to make money with us, You want to know when me and Logan are buying, selling, what assets we're accumulating before we talk about them live on stream. See the analysis every single day. I'm posting charts. We're posting analysis. We're looking at people's portfolios. We're giving you actual real price targets on our assets that we're going to sell. If you want access to all that, it's inside the Discord. So the link is in the description. Join the school community. As soon as you join it, I'm going to send you the link to the Discord. We'll get you assigned a role. You'll be inside. You'll be ready to rock. If you want access to the private crypto plays campus within the Discord, so that's where you get all my personal positioning and what I'm doing personally when I'm buying, selling, etc. You're going to go into the classroom section and there's a private crypto plays inside of the school. You enter the private crypto plays course inside of the school. I'm going to send you the link to that. We'll get you inside of that portion of the Discord. Great. One last thing with the Discord too. March 1st is when we're going officially live, strictly Discord. The Taylor's code's $25 a month right now. In 2 days, it's going to be $50 a month. You're going to do it anyways. You're going to join. So do you want to pay more for something that you don't have to? I mean, I'm sure you're like me, Logan. You don't want to pay more for something that you don't have to, right?
No.
Of course not. So you join now, you get grandfathered in at $25 a month, and you get the alpha for the rest of eternity. You're an investor. You're here watching crypto. You're here trying to make money in the crypto market. You call yourself an investor, but you don't think $25 a month is worth it to make an extra $5, $10, $15, $30, $100,000 on your portfolio in the long run? Sure, you're an investor, I'm sure. Yep. Anyways, we'll see you guys inside the Discord. Logan, I'll let you talk about your campus and what you got going on in there too.
Yeah, I'll keep it super quick. The website's I'm having someone develop a website for me right now to be able to sign up for the Discord with me. He said that I'm going to be able to review the draft with him on the 28th, and then I believe 1 to 2 days after I review the draft, everything goes live. So I'm going to get that linked up on the YouTube and then on my socials and stuff too, so everyone will be able to join that way. The way I'm structuring it, it's $50 a month to be able to get into the Discord, have access to the community. I post just some general stuff in the fitness chats. You have access to the community chats, the crypto chats, everything in there. You're also going to get full access to the fitness section of the Discord. So I post all my daily workouts in there. I post what I do for cardio, my diet stuff, sleep stuff, recovery, everything that I'm doing. I talk about in there too. I have a section that's dedicated to faith as well. So obviously I read through the Bible every single day. I like to post stuff in there about that as well. Next tier from that, $99 a month would be actual personalized one-on-one coaching. So that's really for someone that wants to kind of take it to the next level. You're not just looking to go to the gym casually or, eat a little bit cleaner and make some minor adjustments and, maybe get some tips. Like you really want to try and take stuff to the next level. That's what that would be for. And then the $150 a month, I believe, is
access to everything.
Yeah, that's full access to everything. So you get personalized one-on-one coaching with me, full access to the fitness section, full access to the private crypto plays, full access to Bobby in the e-com section to help you build a store, review your current store if it's something you're already into. So that's how everything's structured. Again, the last 2 days to be able to join for $25 a month, get grandfathered in at that price. I know a lot of people will bullshit about saying, oh, the price is going up in a day or 2 days or next week or in a month or soon or whatever, but it actually is. That's why we've been saying it every stream for a month.
Right. We're trying to help you.
Yeah. So, I mean, it costs us money to grandfather people in. We're trying to help you out and grow the community as much as we can. But that'll all be live in the next couple of days. And that's all I got. I'll post another couple YouTube videos this week too. And for anyone that does want to follow me on Instagram, I post a lot of fitness stuff on there too. My Instagram, it's not linked on the screen. It's Logan_Bauer. So Logan_BOWER.
Yeah, Logan_Bauer on Instagram. Did you give him your YouTube channel?
YouTube channel is Beezy Performance. So it's BEEZY Performance. Used to be a firework channel when I was like 14. So if you want to watch any of that content, feel free. But yeah, I started posting videos on there weekly and going to continue to grow that out. So
sick. Bauer's content's off the charts. It's going to be off the charts too as it continues to grow. So check out his channel. Logan's not telling you guys, but he's a freak. So this is why he's running the fitness campus. He takes what he does incredibly seriously. He just did his blood work, got all of his results. He met with Who was it?
Merrick Health.
Yeah, Merrick Health. You know, he's going to be supplementing professionally. He's going to be competing professionally, is doing marathons, Ironmans, etc. All these things are coming down the pipeline. This isn't just a fucking your buddy who told you, hey, bro, what'd you hit today? Oh, I hit bicep curls. You know, it's not fucking, this is professional shit. This is professional level fitness, supplementing, dietary plans, everything that you would need to actually put yourself in an incredible physical, make you incredible physically. It's going to be in there. Okay. So, and you guys will see that from his content. But outside of that, Mr. Producer out of here. Where are we at? Oh, the chat's on fucking fire.
Get me some new shoes. I'll do more than that.
Yeah, you know,
Get you a shoe store.
Don't leave these freaks without their, you know, they need their fix.
Good night.
There it is. Look at them. As soon as you say good night, everybody leaves. They just needed that.